Let's have a quick conversation about the general ledger. So, if you have a business or you have, let's say, a project or even a nonprofit, it's important to have a clear idea about your general ledger. So, in today's conversation, I want to give you a quick definition of a general ledger, its importance, and how the whole thing works. So, you have a clear idea from A to Z, okay? So, when starting a small business, you may not know all of the important ins and outs of record keeping, and you don't have to. You're not a PhD in accounting, but it's important to understand how the general ledger affects your company's overall financial health. Okay, while a simple petty cash book or journaling system may work for you at first, a general ledger is a record keeping system that you should implement sooner instead of later to actually track your company's transactions, generate financial statements, and other accounting reports. Okay, so that's important to really keep that in mind. But let's go back to a general ledger 101. What is it really? Think of it as an accounting system you can implement to track your company's debit and credit transactions, along with detailed information about each transaction, like the dates, the amount, and a short description of the transaction. If you want, you can actually incorporate in your general ledger tracking system the geography also. In other words, you want to know where the transaction occurred. Okay, so think about your your general ledger, as a great transactional dashboard that really gets you all kinds of information. So it's important to understand that sometimes you will hear the term principal book of accounting system. That's the same thing as general ledger. You might hear GL is the same thing as general ledger. So this system acts as a master document detailing the business's transactions over some time. These transactions are organized by accounts together with their dates, descriptions, and account balances. So enough information to give a bird's eye view of your business's financial health. You may include individual assets and accounts like accounts payable, accounts receivable, liabilities, inventory, and investments. Okay, and this information is actually used to prepare financial reports, monitor finances, track cash flow, and prevent accounting errors or fraud. So when I say when I say financial reports, is the same thing as accounting statements. So we're speaking about balance sheet. We are speaking about statement of cash flow. We are speaking about statement of owner's equity, and we are also talking about P&L, so profit and loss, also known as income statement. So if you are interested in knowing more about the general ledger, it's important for you to know the types of general ledger accounts, because a general ledger is actually a pretty structured repository, but you got to really know the components of that repository, the types of general ledger account, and how they impact your company's financial statements. Okay, and so your business will use a general ledger to track and organize different types of financial transactions. Some of the most common types of general ledger accounts are asset accounts, liability accounts, equity accounts, operating revenue accounts, operating expense accounts, non-operating revenue accounts, non-operating expense accounts. Let me really break it down for you a little bit. So I want you to remember those 7 words: assets, liability, equity, operating revenue, operating expense, non-operating revenue, and non-operating expense. Let me break it down even further. So when I speak about asset accounts, those accounts record all assets owned by your company, like capital expenditures, cash in the bank, inventory, and accounts receivable. Sometimes you will see the let's say the distinction between short-term accounts receivable and long-term accounts receivable. Short-term assets versus long-term assets. Accounts receivable are short-term assets, by the way. So liability accounts track all legally binding debts that your company owes to someone else, like accounts payable, employees' wages and tax payable, or loans. When you think about equity accounts, those represent the owner's or member's capital, common stock, dividends, and retained earnings. When I speak about operating revenue accounts, they show the earnings generated by your business's primary activities, like sales and service fees. For operating expense accounts, Here you have accounts that represent the cost of production and business operations, like wages and rent expenses. Next, you also have non-operating revenue accounts. So those record all gains and losses that you cannot attribute to normal business activities, like sales of assets or investment income. And non-operating expense accounts show costs not incurred from everyday business expenses, like one-time legal expenses or interest expenses. So if you are a small business right there and you're listening to me right now, how do you create a general ledger without actually have a PhD in accounting, okay? Or without being a CPA? How do you do it? Well, first of all, you want to determine which features you want to include. And the features will depend on the kind of industry you're in and also your company's operational setup. Okay, so what are the features you want to include? Number one. Number two, you want to create a ledger table in columns. Number three, you want to fill in essential information. Number four, you want to record all financial transactions. And number five, you want to maintain your ledger. By the way, everything I'm telling you here, if you have accounting software, you can actually do it automatically. But if you don't have accounting software or you don't have the money to invest in accounting software when you're starting your company, it's important to have a clear idea about how to do things manually. So when I speak about determining which features you want to include, options to include on your general ledger chart of accounts or assets, liabilities, revenues, equities, and expenses, along with other income and expenses if relevant. So your ledger will reflect the numbers that are important to your small business. So you want to create a ledger table in columns. Make your table double entry style with columns that have two sides, one for debits and one for credits. You want to fill in essential information, so include the account names and numbers, the date of each financial transaction, a reference number, a debit column, a credit column, and a balance column. You may also include a space for a short description for each transaction for better clarity on your cash flow. That's what I was telling you a little earlier when I said you might want to really include the geographic reference to that transaction. So you want to record all financial transactions. So once your general ledger has been created, you want to diligently fill in the spaces, documenting all financial transactions that take place. This is the place where you consolidate all cash inflow and outflow, purchases, sales information, and other journal entries. And finally, you want to maintain your ledger. Okay, you have to maintain the ledger over time. So adapt the ledger to suit your working style while keeping it up to date and accurate. Double check record accuracy routinely to prevent accounting errors, so you can use the info within it to more precisely track your company's growth. That's important, okay? And what happens here is that balancing the books this process used to be a demanding task, but with the help of general ledger templates and accounting software, nowadays it's very easy to automate the whole process. So let me talk to you about general ledgers and double entry accounting. So you can see on the screen here, this is actually the double entry accounting I'm speaking about, debit and credit, okay? So general ledgers actually use the double entry bookkeeping method to record transactions, meaning every transaction will be posted to two or more general ledger accounts. By the way, the double entry accounting system is actually compliant with US GAAP or also IFRS. US GAAP, United States Generally Accepted Accounting Principles. IFRS, this is International Financial Reporting Standards. So this is really good. It's just better. Like if you have a business, you may choose to ignore double entry accounting. But if you want to grow, if you want to really reach out to investors, or you want to really reach out to creditors, to lenders, it's better that you have a double entry accounting system. Otherwise, you can't really make it. Okay. So when I speak about double entry accounting, what happens here is that one side of the entry will be a debit, and one side of the entry will be a credit. So debits should always equal credits. Okay, that's the whole thing about double entry accounting system. So each ledger item will have 4 main sections. So these are a journal entry with a description of the transaction, a journal entry transaction number, a debit and credit entry to record the transaction, and posting the transaction from the journal to general ledger accounts. So in double entry bookkeeping, each transaction will affect at least two accounts. One is debited and the other is credited. So the accounting equation used to balance the debit column with the credit transaction. And you can have this done automatically. Let me show you on the screen here. So the accounting equation is assets minus liability equals owner's equity. That's one way to look at it. Or assets equal liability plus owner's equity. So I'm going to put those two equation on the screen so you can have a clear idea. So if you think about general ledger, it's important to reconcile your accounting system, your accounting transaction. Let's say your accounting transactions from time to time, because nobody is perfect, and if you don't have even if you have a software, you might have errors every now and then. But if you don't have software, it's even more important to think about the reconciliation process. Okay, so to reconcile your general ledger at the end of each fiscal period, you gotta really have you can use a software, or you can actually do things manually. But if you do things manually, you have to generate a trial balance by totaling all of the debit and credit accounts, and then checking to verify that the debits are equal to the credits. Okay, and if for any reason, and this might happen, if for any reason these are not equal, then the accountant will check for errors in the journals and accounts. Okay, so remember, debits accounts must total credit accounts. Let me give you a few key steps to a proper general ledger accounts reconciliation. First, you want to gather information. Next, you want to compare beginning and ending account balances. You want to reconcile all transactions posted to the general ledger accounts. You want to adjust journal entries. You want to review any adjustments and reversals made. And you want to review the adjusted trial balance. So when I speak about gathering information, basically you want to gather all of the end of period data, getting all the details regarding the credits and debits made to each account. And when I speak about comparing beginning and ending account balances, verify that all assets, liability, and equity accounts are balanced to the cent. So accounting software like Wave, like FreshBooks, like QuickBooks, they can really help you make this a quick and easy process. When I speak about reconciling all transactions posted to general ledger accounts, check that all transactions were actually posted to the correct, I insist on that, to the correct general ledger accounts. And also in terms of adjusting journal entries, these are actually journal entries made at the end of the fiscal period to ensure all revenues are recognized when services are performed and expenses when incurred, regardless of when the cash is received. Okay, that's because if you want to really comply with US GAAP, you want to have you do not want to have cash accounting. You want to use regular accounting, if you will. That's important. So you really acknowledge transactions as they happen, not when cash is transferred. And you also want to review any adjustments and reversals made to make sure they are accurate. This is an important step to ensure no errors have been made. So creating a trial balance will give you insight into whether your calculations and adjustments were correct in the first place. And just review the adjusted trial balance, so look everything over one last time to be certain your account reconciliation is actually complete. So now when you think about general ledger accounts, they are important to a certain extent, okay? Not only for your small business, but also for your established business. So using general ledger accounting is important for businesses of all sizes because it is actually helpful for financial transaction accuracy, the collection of information for financial reports, balancing the books, doing taxes, spotting errors, seeing real-time business insights, And finally, compliance with laws, okay? All kinds of laws, US GAAP, IFRS, and so on and so forth. So when I speak about financial transaction accuracy, the cool thing is that having an accurate record of all transactions that have taken place within a single point in time will ensure your financial reporting is done correctly. It is actually organized in such a way that you can quickly view and verify information. So the precise, accurate details in a general ledger leave little room for error. You're also able to collect information for financial reports. So the general ledger serves as the basis for your company's income statements, balance sheets, and cash flow statements. So by keeping your general ledger up to date, stakeholders, investors, and analysts can accurately evaluate your company's performance. You're also able to balance the books. So when going over all transactions in the general ledger and completing your trial balance, you'll be able to see all of the accounts closing balances and track down any errors, missed payments, or unusual activity. So this gives you the chance to reconcile those errors before closing your books at the end of an accounting period. Also, doing your taxes is also important, right? Because the general ledger is a big part of your company's overall financial picture, acting as an important repository of all your accounting data. It is actually the place where accountants can easily access a streamlined picture of the business income and expenses. So that's really important from a flexibility point of view, but also from a scalability point of view. So if you also have an easy to read general ledger, you are able to see exactly, basically you can spot unusual activity or fraud quickly. So you can take action before a serious problem develops. You can also use the information on a GL to verify the accuracy of financial statements during internal reviews and audits. So the thing is that I want to show you real quick a general ledger example, okay? I mean, by the way, every business is unique, okay? Every small business is unique. So the example I'm showing you maybe different from the one that your business is actually presenting, okay? This is more for illustrative purposes. So, but overall, when you think about a general ledger, you basically want to have this kind of information. I want you to look on the screen here. So you have petty cash, you have accounts receivable, you might have different accounts, assets, liabilities, expenses, and revenue. As like I said, non-operating revenue, but also non-operating expenses. Okay. So one thing I want to say here is that if you want to really generate your accounts, if you want to generate your general ledger easily, it's just a lot quicker to use accounting software. Like I said, you can use QuickBooks, FreshBooks, Wave, Xero. I mean, it's just a lot easier for you to really get things done fast. Okay, unless if you're interested in accounting, let's say basic accounting or bookkeeping, then you can really do it yourself. You can generate things yourself. But if you don't have time for that, it's just better to do things automatically. But one thing I want to say before I close to this conversation is that don't get it wrong though. A general ledger is not the same as a balance sheet. Okay. If you think about a general ledger, think about a set of ledger accounts where transactions recorded in journals are posted. A balance sheet is actually a statement that represents your company's financial position at a point in time. That's why sometimes you hear they say balance sheet as of December 31st or a balance sheet as of June 30th, for instance. It's always at a point in time. Okay. And also, there is a difference between a general ledger and profit and loss. So the general ledger is a detailed record-keeping tool, while the profit and loss or the income statement reports your company's profit during the period. So it could be during a month, during 3 months, during 6 months, during a year, or during even 5 years, okay? And so the difference between a journal entry and a general ledger actually happens, that difference lies in the use. So basically, a journal entry is a sequential list of accounting entries recording transactions, while a general ledger is a formalized account system where recorded transactions in a journal are posted. Okay, so the best way to really know if your general ledger is correct is to reconcile all entries, then generate a trial balance to verify the completeness and ensure that debit balances equal credit balances. If you do it right, if you follow double entry accounting, they should be those balances should be accurate. So you want to generate trial balance, and you can then investigate discrepancies and make corrections if necessary. So that's really cool. So in conclusion to this conversation, I spoke to you about the general ledger. So I explained what a general ledger is, the types that you have, how do you create one, the general ledger, and its impact on double entry bookkeeping, the general ledger reconciliation process, and the importance of general ledger accounts. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous, marvelous, marvelous.